When it comes to trading high-liquidity Forex pairs like EUR-USD, GBP-USD, or USD-JPY, precision matters. These pairs are volatile, yet incredibly responsive to technical analysis, making them ideal playgrounds for traders who know how to read a chart. So, what are the best chart analysis techniques to master these markets? Let's dive in. First up, let's talk about trend analysis. Sounds basic, but it's one of the most powerful tools in your arsenal. You want to identify whether the market is trending up, down, or just ranging. A clear uptrend is marked by higher highs and higher lows. A downtrend, lower highs and lower lows. The key is consistency in movement. Candlestick patterns are another powerful tool. These visual cues can tell you stories about market sentiment in just a few seconds. Bullish engulfing, pin bars, dojis. They're not just pretty shapes. A well-placed engulfing candle on a key support zone in a high-liquidity pair can mean the difference between a minor loss and a major win. Next is support and resistance. These horizontal zones where price historically reacts are critical. Draw them clearly. Don't chase the exact pip, aim for zones. Watch how price behaves as it nears these areas. High-volume pairs respect these levels more consistently, giving you better trade setups. Volume analysis, though sometimes overlooked in Forex, also has its place. Use tick volume as a proxy. Spikes in volume at key levels often signal institutional interest. Combine this with candlestick confirmation, and you've got a high probability trade setup. Now, let's touch on indicators, not just any indicators, but ones that add clarity, not clutter. Moving averages can help smooth price action and confirm trends. The 50 EMA and 200 EMA crossover, for example, is a classic for a reason. But you want to avoid lag as much as possible. That's where having a refined, real-time tool comes in, like the Apex Trend Indicator by FX Limit. It's not just another MT4 plugin. This one's built with accuracy in mind. It scans multiple pairs and timeframes, shows you trend direction instantly, and gives non-repainting signals. So what you see is exactly what the market gave. The buy and sell signals appear with arrows directly on your chart, paired with success rate stats, so you know if a setup is worth it at a glance. For traders of high liquidity pairs, where every second counts, that's huge. Let's not forget confluence. The real magic happens when multiple techniques align. Imagine this. You're watching GBP USD, and it pulls back to a major support zone, shows a bullish engulfing candle, and the Apex scanner lights up with a high success rate buy signal. That's your green light. One signal might be noise, but multiple confirmations? That's precision. Don't sleep on higher timeframes either. Even if you're scalping M15, check the H4 or daily. The big players operate there, and their footprints will give you context. If the daily is screaming downtrend, but your M15 chart looks bullish, think twice before entering. Lastly, backtesting and data matter. Look at past trades. Analyze the outcomes. With tools like the Apex Trend Indicator, you can actually scan past signals and see which worked and which didn't. It's not just about knowing what the signal says, now it's about seeing how often it's right. That builds trust in your system. So whether you're new to Forex or deep in the game, refining your chart analysis with proven techniques, clean confluence, and reliable tools can turn your trading from guessing to calculated execution. High liquidity pairs are unforgiving, but if you respect the structure, align with the trend, and use intelligent tools, you give yourself the edge. This is FX Limit, and if you're serious about trading smarter, not harder, make sure your chart isn't just pretty, make sure it's profitable.